Opinions expressed are those of the program host and guest and not those of WPSL. WPSL does not endorse products that may be mentioned. Any reproduction or retransmission of this broadcast is strictly prohibited without written consent of WPSL. It's time now for the Real Estate Pros Show. With the latest information from Jeff Rubin of Rescue Florida Realty, James Canada of Mortgage Plus Financial, Phil Resnick of Chapman and Primal Law, and experts from around the world. Call in with your questions and comments at 340-1590. Now, here's your host.
Good morning. This is Jeff Rubin with Rescue Florida Realty, and welcome to the show. It's our second show, and I thought we went pretty good last week. And we want to jump into a few interesting things that are very timely. We had something that happened yesterday. If some of you were watching the news, it was reported by the Associated Press and various other news outlets of CBS that there is a $25 billion foreclosure deal with some of the leading lenders and some of the states. And, well, I find it very interesting, according to the Associated Press report, that 5 major banks, Bank of America, J.P. Morgan Chase, Wells Fargo, Citibank, and Ally Financial, and the U.S. State Attorneys General are trying to adopt some agreement within weeks that have to do with a lot of the robo-signing. I'm sure that was a big topic that a lot of people heard about and may have seen the report on 60 Minutes in regards to a lot of the fraudulent activities that some of these lenders or some of the lenders' servicers were into in regards to these foreclosures and how they were inundated and tried to cut corners, let's say. What's very interesting about this is that $25 billion is a big number. In everyone's world that's probably listening right now, you can't even think of that kind of number. But when you put it into the realm of what exactly is going on in the U.S. and especially Florida, it's a pretty small number. And what's also interesting about it is that the people that were in charge and the people that made the decisions to do these things pretty much getting off scot-free. And I don't know how people out there feel about it, but we certainly would welcome your thoughts and comments in regards to it at 340-1590. And we're going to discuss a little bit about some of the things in this supposed deal that the president may allude to. There's not a confirmed report that he's going to. It just mentions it in this report here that he may discuss the points of this in tonight's State of the Union address. Now, the breakdown, the way it works is the $25 billion, $17 billion of it would go towards reducing the principal balance for struggling homeowners. $5 billion would go to put into a reserve account for various state and federal programs. A portion of this money would cover the $1,800 checks that would be sent to homeowners that were affected by deceptive practices that have already lost their homes through this robo-signing or other types of practices.
Yeah, that's going to help.
Yeah, well, unfortunately, they can't get their houses back because they did lose it, but $1,800 doesn't really help all that much. Certainly, I wouldn't turn down an $1,800 check, but it certainly doesn't help as much as some of the other things that could have been done for these people during this process instead of basically committing fraud amongst other things that were going on. And I think that this is really sort of them not agreeing that they've done anything wrong. They're just paying to make up for some of the damage that was done and try to help people. I think that there was definitely some politics that were played here because it's just all about money at this point. But according to this, and you mentioned the $1,800 not being a lot to help, how about this? Only about 750,000 Americans, or half of the households who might be eligible for assistance under this deal, will likely receive those checks. Now there's another $3 billion that would be used to help homeowners refinance at a 5.25% rate, far below the current mortgage interest rates.
With new closing costs, not probably.
Possibly.
So it will cost those homeowners money to do that.
Well, it could.
Maybe the $1,800 could help.
Yeah, or maybe they're going to ask someone like myself to help them out on some
well,
closing
you might
costs.
already be helping and you just don't know yet.
I think we all are helping and we just don't know it yet.
That's true.
Details of the plan obviously are not all out. These are just some of the terms that the Associated Press has reported. It sort of blows me away that $25 billion, although, again, a big number, it doesn't even scratch the surface here and doesn't really begin to affect things for the people that have lost their houses because of this robo-signing fiasco and because of other fiascos that were really created by a perfect storm, not just by banks but by Wall Street and the government and just unscrupulous people in general. It's sort of sad. But I think that we can touch upon some of these things and really talk about, like the whole thing with the robo-signing thing. Phil, I know that you've had some experience with that. So, I mean, what's your take on this whole robo-signing thing and how this even tackles that issue?
Well, I think it's a step in the right direction. As you were saying, the exact details of the plan aren't yet out. This is from the Associated Press. From my understanding, they're hopeful that there will be an agreement reached within the next few weeks, and I think it's a step in the right direction. But as Jeff was saying, it's too little, too late as far as helping people. I mean, if you're already in a situation where you've unfortunately lost your home to a foreclosure, $1,800 isn't by any stretch of the imagination going to get you back into that home or make up for any of the lost opportunities that you had living there with your family. Again, I'm hopeful that in the future there will be more assistance, but up to this point it appears our government has not really stepped in the right direction as far as helping people, and that's one of the reasons that it's important to not just ignore the problem and wait for our government to help you. It's important to be proactive and seek assistance from qualified professionals that can hopefully help you if you are in a situation where you may be behind on your mortgage.
So there's no handouts, and people shouldn't expect there to be handouts, although people do expect their government, especially in this country, to be there to help them. But there has to be a willingness and some type of decision that you need to help yourself.
Correct.
Well, but that's a question I have I throw out to either one of you. It says here for struggling homeowners. What's a struggling homeowner? Is it a guy who's
It's pretty much everybody right now.
Well, I mean, yeah. Is a struggling homeowner the individual who is struggling to make sure they haven't missed a mortgage payment in the last 2, 3, 4, 5 years, or is it a guy who hasn't paid the mortgage in 6 months because he doesn't have a job or whatever the situation may be? Is that individual really struggling anymore? And it's really almost like a moral call. So you'd almost have to wonder what would be the guidelines to define what a struggling homeowner is.
Yeah, how will you qualify for this money?
Good question. I don't.
That's part of what they're going to work out later, right?
Yeah. Well, of course they're going to have their opinions of how that's going to be. The banks are going to have their opinions. The attorney generals are going to have theirs, and somewhere in between is going to be where it lies. Although a lot of the programs that I've seen in the last 4 years that have come out in the government programs as well as the private programs through the lenders, they all have good intentions, but they all
Well, they had good intentions when they started giving these loans out too.
Oh, sure. They had lots of good
everyone
intentions.
would make money and everyone would have a house.
You mean like if
Those are
someone
good intentions.
could get a fixed rate loan and get paid, and make a decent payment on that, but because there might have been some unscrupulous people that were pushing mortgages, and they instead of making $1,000 commission, they wanted to make a $6,000 commission, one of those pick-a-pays or something like that. That really was a bad loan for the consumer, and that's causing a whole nother wave that's
Well, we're
coming.
selling you a house today. We don't know what's going to happen to you 2 or 3 years from now. That's up to you.
Well, sure, but there
So
has to be
that-
some responsibility all around. I definitely agree that there has to be responsibility in terms of the people purchasing the house, but when they come to a professional, whether it's me in real estate, whether it's James with a mortgage, or whether it's Phil with the legal questions, there's a reason that they're coming to us. And the reasons they're coming to us is because we're supposed to be the professionals. We have licenses. We went to classes. We're supposed to be smarter than them. Does that always make us smarter than them? Not always. But the point is that it's sort of our job to know things and try to give them the best advice possible. Obviously, we can't guarantee anything.
See, what in my opinion, where it kind of went sideways, I was working with Wells Fargo, and at the time they were a very conservative bank, and they still are. And reason being, that's probably why they're one of the, banks are still sticking around and being a leader.
Well, they made
in this
their customers qualify before they handed them mortgages, probably.
Well, yes and no. I
Yes,
mean,
you do have a job, not just want a house.
Right, but where the whole thing, banks in general, I'm not trying to single out any one individual bank, but where it went sideways was the loan to values. Yes, everyone, I've met people with a 520 credit score who are more financially responsible than a guy with a 700 credit score. And I know it sounds weird, but there are sometimes things that just happen. It's a blip on a radar screen, okay, and the score goes down. Life happens to people, and unfortunately, they're going to be judged by a number from a credit bureau. Where it went wrong is the loan to values. When you turn around and you start telling people, all right, you have a 560 credit score. You basically are getting by from check to check, have no savings, you have a bunch of debt, and you wouldn't get 100% financing for a house. Actually, in some instances, I saw 110% financing. They were giving people loans for more than a house is worth with the visions of grandeur that the house is going to appreciate at such a rapid pace, they'd be okay. And that's where it went backwards.
Well, what about like in California, where they had so many stories of people that were making $20,000 a year and they were getting a $700,000 mortgage?
Oh yeah, no. Well, that was a lot of that was because of the stated loans, and it goes back to what you were saying, the unscrupulous loan individuals. Whether a mortgage broker or a loan officer in a bank. Believe it or not, the loan officer in a bank takes less testing than the actual mortgage broker. You're not required to be licensed to work in a bank.
Because the bank has the license, right?
Because they work for a major financial institution, so automatically that makes them smarter than the person that doesn't. Is that how it
that's
works?
the perception,
Yes.
but yeah, that's... I actually would sit back and I'd listen over to some of the people I was managing, and I'd listen to what a customer was saying to them, and as soon as the customer was gone, I'd come in and say, you need to study up on this product a little bit more before you start talking to them about it. Unfortunately, that was one person. This happened nationwide everywhere.
Okay, well, we're going to take a break, and we're going to come back and discuss this further in just a few minutes. You're welcome to call 340-1590. That's 340-1590, and we'll be back in just a sec.
And you're listening to the Real Estate Pros Show here on WPSL 1590. Back to your host, Jeff Rubin.
Thank you, Veronica.
And we do have a caller on the line.
Okay, well, let's go to Marty.
Marty put us on hold.
Oh,
I'm right here.
Ah, Marty. Oh, you know what? Hold on a second. I think we're playing that music.
Yeah.
Let's try it again. Are you there, Marty?
Hello?
You're on.
Hello?
Yes, Marty,
Okay.
go ahead.
How you doing? I've been listening to the show, and I was wondering, the bill that was passed last year that started December or January 1st for people that have good credit, no late payments, never late on a mortgage or whatever, can refinance without a, what do they call it? When they check your house, give you a price for your house.
Yeah, an
appraisal and everything. Do you think that's part of what the government's trying to do to help some people out because of that big mess with the banks, with the robocalling or robo adjustments and all that?
Well, Marty, I don't think it's directly related to it. It's just another attempt to try to stem the tide here, help people out. There's just so many people that are underwater on their mortgages, and there's people that are still responsible making their payments, and that's obviously a big question a lot of people have. A lot of people oppose a lot of these bailouts because people are behind. What about the people that are still responsible, even though they know that they're upside down on their mortgage? And what do we do for them? And I'm a big fan of all of it. I think that if you're going to help one, you certainly have to have programs for the other. Because it's inherently unfair, number one. But number two, we're in a situation now where I don't think anyone has ever fathomed this, and I think we're all sort of trying to figure it out. The problem is it's the size of our government, it's the size of Wall Street, and I don't know how connected they are to Main Street USA and what goes on every day. And like this thing that we're discussing today has a lot to do with it. You could see that it really doesn't connect with the real problem. And now the program that you're talking about, I believe that's the HARP program. And I know James was talking about that last week, right?
Yes.
Okay.
Yeah.
Oh, I missed it.
Oh no, Marty. Basically, what that is it is.
Oh, I've done it.
Oh, you did.
I just finished today, and they lowered my interest rate from 5.75 to 4.25.
Oh, good.
And I saved myself $150 a month. And I waited to take advantage of that.
Right.
And I think it's a really good thing. And hopefully other people out there that, that have tried to keep their head above water maybe take advantage of that, because I'm really happy with it.
Yeah. How do you know that they tell you the percentage that you're upside down on the home? What did you owe versus what it was worth or perceived that it was worth?
Yeah, I think that, well, before this whole mess, the house was appraised at $289. Now, when I went to the bank a few months ago, it was $87.9, and I owed $109. Is that what you're asking me?
Yes, that's exactly what I'm asking you.
Yeah,
so
and there's no appraisal, so they don't put that into play. Your house is only worth. They don't go by what your house is worth now. If you fall under the guidelines that I mentioned.
Yes.
And let me tell you, it's a great thing, and people should take advantage of it if they can.
Now, did you refinance this through the same servicer or lender that you had?
Yeah, Bank of America.
Right. Yeah. See, the way it works is currently it's they call it 2.0. So it's HARP, HARP, 2.0. And originally, when it first came out, it wasn't that attractive of a program. Now they made some enhancements to it, and what you're eligible to do is you can refinance up to 125% of your mortgage. Based on the numbers you gave me, you're 122%. So you slid just in there. Yes. Right, and it's a nice program because you would not have been eligible to take advantage of these great low rates now. Right. And like you said, what did you save you, 100 and how much?
$150 a month.
Yeah, it's a great program. Yeah.
Yeah, and I had tried to refinance in the past 3 years 4 different times. Call the bank, and right away, they go through the rigmarole, and then they go, "Oh, well, we can't do that.
Right.
$87,000. You owe $109. We can't do it." And once this happened, like I said, I jumped right on it, and it was very quick. It was a 30-minute phone call. They called me yesterday, went through the whole process. My local bank had the paperwork this morning. I walked in, signed the papers, blah.
Oh, great.
Well, congratulations.
Yes.
I mean, you like to hear those kind of things because that's the way it's supposed to work. Unfortunately, it doesn't always work that way.
I know.
But you're one of the lucky ones, and that's good. I mean, that's what these programs are supposed to do, is to provide some relief to people like yourself, whether you were behind or not. and it should make the process not just another stress related incident. It really should relieve the stress and not make you go through more stress. So it sounds like you really you lucked out. It sounds like you got everything taken care of, and I congratulate you on that.
Thanks a lot, and I love your show.
Thank you very much. Thanks for calling.
Bye-bye.
Just to touch a little bit further on that HARP program, HARP 3.0 is actually coming out. It's slated to be out in March, where you will not have to be 125% upside down. You can be unlimited percent upside down. So you could owe $400,000 on the home. It could value at $100,000, and you can go ahead and refinance it.
Do you have to requalify to refinance your house you're currently paying for anyway?
You do. I mean, there's going to be some criteria to it.
And I always worry about closing costs.
Well, yeah, and that's a protection, because a lot of the things that the government's doing, they're not going to. There's only a certain amount of fees that you can pile back into a loan.
Yeah, because you're already recorded down at the courthouse. It's your same house.
Right.
So
now another piece on that is you can reamortize for a 30-year mortgage again, but what they are intent to do is to have you lower the term. So they don't want just to lower the interest rate, they want you to lower the term. So ideally, you're going to lower the rate down. Say in this Marty's situation, it was almost 1.25. He got his interest rate lowered down. But if you also lower the term down, instead of saving the $150 a month, if you're comfortable making that payment, well, now you can pay the house off in a shorter time frame too.
But this is for people though that are still current or just about current, like was it 60 days or 30 days, if I remember correctly from last week. So the people that are behind further than that, they can't do this program.
No. If you just let the mortgage go at this moment, you can't.
is that where this $25 billion will come in?
That's a good question.
See, and just because this gets passed with the $25 billion deal, the lenders actually have to get on board with it. That's why when HARP first came out, the lender's like, oh, that's a great program, but we're not offering it. Or they make the guidelines stringent to it.
It's amazing to me, though, that they're not going to offer it until you come and ask for it. I mean,
Right.
They know who their customers are who are current, and they know who might be, paying a little late but getting the payment in. They know the people who are with the highest interest rates. Now, to keep those customers, you would think that they could just go back and readjust loans, but they're not going to do anything unless you ask.
Well, that's just the way it typically is with these things. I mean, they're not going to reach out to everyone, although the HAFA program, which is the Home Affordable Foreclosure Alternative Program, which is a short sale program sponsored by the Treasury Department, they had to reach out and offer either modifications or short sales, and they had to send letters out to everyone. Did they do that? Who really knows?
It's time for the news.
Okay.
We're going to take a break. 340-1590, taking your calls here on WPSL 1590. back to the Real Estate Pros Show here on WPSL 1590. Back to your host, Jeff Rubin.
Thank you very much, Veronica. And we were talking today about this $25 billion deal between the Attorney Generals of the United States and some of the larger financial institutions, Bank of America, JP Morgan Chase, Wells Fargo, Citibank, and Ally Financial, and is directly related to this robo-signing problem. And what I'd like to talk about in regards to that now is we talked about $25 billion. We talked about how $17 billion of it would be going to reduce principal balances, $5 billion into a reserve account to pay homeowners, only about $1,800, the ones who are affected by this that have lost their homes, and only about 750,000 Americans are actually going to qualify for that. What's interesting is if your loan is owned by Fannie Mae or Freddie Mac, which there's a really good chance it is, because they own about half of all U.S. mortgages, or about 31 million, that's 31 million U.S. home loans, you don't qualify for this program. You do not qualify. But for those lucky few who do qualify, you might actually get a principal reduction, which probably be somewhere around, on the average, they're estimating $20,000, which is about $100 some odd a month when we looked at the calculations, but which isn't bad, but it's probably not enough for a lot of these people. So if you don't qualify for this program, or that $20,000 is not going to help you, you're going to have to look at other alternatives. Eventually, you're going to be foreclosed upon if you're not paying your loan. So you have to consider what are the alternatives, and something that we've discussed and something that we do very well at Rescue Florida Realty is market properties for short sale. And there's programs out there, even Chase has one, Bank of America has one. There's various programs out there in terms of what you might be able to do to help yourself out of a bad situation. It's not always like in the beginning where you do a short sale and then you're on your own. A lot of these banks are realizing that they need to sort of throw some incentives out there for these people, because some of these people are truly struggling, may not even have the money to move. So what do you do in those cases? There's programs out there that can help at these individual lenders. If you haven't received a letter, you may just want to look into it with your lender to see if they have a program like that and see if you might qualify for something like that. You could also obviously come visit us, and we can also check and see if you qualify. And Phil, you have some experience with some of these what we call co-op programs.
Correct. As you said, there are several lenders that are coming out with their own programs. Another lender out there that's actually working on a new kind of modification is Aquin Lending. They've come out with what they call a SAM modification, which is a shared appreciation modification, wherein the details on each one is different, but essentially what they're doing is they are writing down principal balances if a borrower is able to make payments for a certain amount of time, typically 3 years on the modification, and then the principal does get lowered, and at the end, if the borrower sells the property, the company Aquin, it's called shared appreciation, because if the property goes up in value, any appreciation that is gotten by the seller when he sells the property is shared with Aquin. It's typically 25% that they would receive if there's any kind of benefit from the sale. It is a great program in some ways as to reducing principal, but on the other hand, there is the aspect of, in the end, if you sell the property, you have to not split, but give a portion of whatever earnings you make from that sale to the bank.
So this took them 4 years to come up with something that, obviously the listeners of this show, most of them, are not privy to some of the things that do go on every day. But Phil and I have done some business over the years. And Phil, if I remember, we probably have had this conversation about why they wouldn't do something like this probably a dozen or more times over the last three and a half years. And it's amazing that it would take that long for someone to come up and say, hey, we should try this. Because a lot of these banks are struggling just like we're struggling. And you would think that they'd want to clear their books of all these non-performing loans or get them performing again somehow, rather than just keep going through more red tape.
Logically, I agree with you, but unfortunately, as you said, we've been talking about this for 4.5, 5 years now, and unfortunately, it appears to be too little, too late. I'm obviously happy there are some programs coming out. One other one that I wanted to mention that I have had experience with is Bank of America had a limited time cooperative short sale program where I was able to have a client of mine complete a short sale transaction where the bank did waive any and all rights to pursue that client for the deficiency, which is really the biggest concern in a short sale, to make sure that it's in the closing documents that the bank is waiving the right to pursue them for the deficiency. This particular transaction, the house sold for approximately $280,000. The amount owed was probably around $480,000 or $500,000, so it's a large forgiveness. In addition, that particular client was able to receive approximately $12,000 cash from Bank of America at closing for moving and relocation expenses. This is not by any means common. I've only had a few transactions where I've had success, but I do have to say that the programs, some of them do work. It's not as if none of them work at all. It is just a matter, I believe, of navigating through the red tape and getting the job done for the client. So there are good programs out there, but the key is, again, not ignoring the problem, making yourself available to talk to whoever your lender may be, and then as well seeking legal advice and seeking advice from qualified real estate professionals to help you with the situation.
Yeah, it's not something that I would advise a lot of you at home trying to tackle yourself. There's a lot of red tape, and what you're going to notice if you try to do it yourself is every time you call, you're going to get a different answer.
Oh, yeah.
And it really boggles the mind. You'll have a bank that will roll out a brand new program. They will publicize it through all the major media outlets. They'll have it on their website. They'll have the details on their website. And you call in and you send the paperwork that you're supposed to, and no one on the other end knows anything about the program. This is a big problem that's going on, and the big problem of why we're having these situations that are these short sales, these foreclosures, and just in general, the whole real estate crisis is being delayed, is because we have so many cooks in the kitchen and no one can seem to be able to communicate well enough to get these things off their plate. So they think they're helping. A lot of times they're their own worst enemies when it comes to the lenders and the servicers. Now, of course, the thing I find interesting about all these programs is it's taken so long for them to come around to offer these things because they've, I think, become more and more desperate.
Is it because there were too many people in need, maybe? They just had to wait it out and see how things just kind of shook out?
It could be that, but I tend to think that it was more or less, again, I'm not trying to bash any of the financial institutions, but I think a lot of it comes down to denial, just very much like homeowners right now that may be behind and think, that they're just going to get a handout and everything's going to be okay, or they hide their head in the sand because they don't seek that advice or help that's out there that we could provide or anyone else that's qualified can provide. And I think the banks, in many ways, it's a business. They don't want to have to lose money, just like anyone else doesn't want to have to lose money. But in order to clean house these days, everyone's going to have to bite the bullet.
But that's like the agreement in the beginning. No matter when you took a mortgage to buy a house, the deal was you pay us and you live in your house, and when you're done paying us, then we're done with business here. If you stop paying, we're going to take your house.
That's correct.
Well, they had a lot of houses to take, didn't they?
That's
and
correct.
That didn't look so good to them.
No, it doesn't look good. And it still doesn't look good.
Right.
But sometimes you
But that
wonder.
was the deal.
Yeah, but sometimes you want, and I agree with you. I mean, you signed a mortgage and a note, and you're supposed to make those payments, and if you can't.
And now I can't, here's the house.
Right.
But they don't want it.
No, they don't want it. And you can't just give it back to them, by the way.
Right.
You can't just call them up and say, I left
Here,
the keys
I'm
in the
done.
door, and see you later. Doesn't work that way.
Yeah, that's again where that deficiency is the big problem in Florida, because I know a large number of people that have done that. They've simply left their keys, called the bank, and said, all right, I'm done with it. I don't have to worry about this ever again. Unfortunately, some of those people end up coming to my office 3 or 4 years later because they get a lawsuit.
Well, they finally got tracked down.
They're seeking the deficiency, and that deficiency can be a large number, and then they unfortunately have to file bankruptcy, whereas possibly if they had dealt with the problem up front, maybe they could have avoided bankruptcy or done it in a better way.
Now,
than
even
they
if
did.
that is forgiven, is there a tax implication then?
There is potential tax liability. I'm not a tax professional, so I always advise my clients to seek the advice of a tax professional.
Okay.
But there is an exception. It's called the Mortgage Debt Relief Act of 2007 that applies to most primary residences. Again, you should seek the advice of a tax professional. But if you fall into the guidelines of that particular law, which right now goes through the end of this year, then you can get an exemption where you don't have to pay that tax liability. But you are correct that normally in a forgiveness of debt scenario, say you owe $200, they forgive $100, you owe the $100,000 as income tax to you, even though you never really had
You
it
gave
in
it
your
to the guy
hand.
who you bought the house from.
Yeah.
Is there, what is it, 5 years statute of limitations? They come after?
5 years,
Up
correct.
to, is that state specific or is that national?
That's state specific.
Yeah, every state is different when it comes to those things, but what ends up happening, Phil just mentioned the Mortgage Debt Relief Act and how it's supposed to sunset in the end of this year, and obviously we hope that they go ahead and extend that, because even though, again, people out there may be listening and they are not behind in their mortgage, they don't have any problems, and they're saying, well, why do we have to do these things? Well, just imagine all of these people that are losing their homes, that they were primary residences, and then they have some type of liability on a tax side. If they couldn't pay their mortgage and they don't have any money to move, basically, so much so that the bank has to actually give them money to get out and find a place to live, and they can't find a job, how in the world are they going to pay their IRS bill? And then what ends up happening
That's like
is,
kicking you when you're down, actually.
but you see the bigger picture with that is, okay, well then they should suffer the ramifications. Okay, well that's fine. Who's going to make up for that?
What are they going to haul you to? Well, was it debtor's jail years and years and years ago, right?
Not anymore.
Yeah.
They don't have that anymore. But
Well,
the
thank
point
goodness.
is, but who's going to make up for those deficiencies in the taxes now?
We are.
It all ends up becoming a burden anyway. So it really just needs to be tackled up front, because all we're going to be doing is chasing, bad money that we're spending good money on to chase. That's what's going to happen.
And a lot of these lenders have already been compensated when they rate the paper loss write downs. They've been compensated by these. So you would almost sit back and say, well, why wouldn't you? Why don't we be more eager to help these families
Stay in their houses and
stay
keep
in the
paying their-
house?
yeah,
So that's,
pay what they can.
That's
yeah.
my big argument to the whole. And Grant, I'm saying all this knowing that there's so many factors that go into each individual case. Who owns the mortgage in the secondary market? Is there mortgage insurance on it? How far are they upside down? If there was fraud involved and whatnot. But logically speaking, if I owe $200,000 and the house is now worth $50,000, and you're going to allow me and agree to a short sale and give me money to get out of the house.
Yeah.
All right, you're going to give me money, cash for keys, to get out of this house. And you're still taking a $150,000 loss. The bank is still taking a $150,000 loss, but they're selling to someone new. Why wouldn't you keep the cash for the keys, let me stay in my house where my kids are being raised or whatnot, and just work with me in that home? I just don't understand that concept.
That is sheer genius. It's amazing that the sheer geniuses at many of these financial institutions and our government haven't thought about something like that, huh?
Well, I've asked that question because I deal on my end of the world. I do deal with a lot of negotiators for these lenders when they're going through the short sales. They'll fly through into our area, and I'll end up going out to eat with them and whatnot. And I ask everyone the same question. It's like almost what you said before. If you ask 5 different people, you get 5 different answers, and they all make sense. But it makes sense in their end of the world, in their end of the spectrum. I just, practicality sense. Why would you make a family leave, pay them to leave, and a new family's coming in?
It doesn't make sense. And again, it goes back to the whole stability issue. How do we stabilize the market? How do we stabilize households? If we can keep them in the same household and make that loan that's unproductive productive again, without having to spend $20,000, without having to spend for legal fees, without having to staff up places to do short sales and foreclosures and inundate our judges and our court systems, and on top of everything, let's not forget again the burden that it puts on the society if someone doesn't have a place to go and doesn't have a job. Who's going to feed them? Who's going to clothe them? Who's going to shelter them?
Right.
It's real basic stuff that I think we all as Americans can understand, but for whatever reason there's a disconnect at the top, not just in the professional world, but obviously in the government. They don't see this on an everyday basis. Just like this $25 billion deal, when they're putting this together, they probably thought this was fantastic. But in the reality, it's like putting a little tiny circle Band-Aid, on a huge cut that needs 40 stitches. It just doesn't work. And the interesting part is that pretty much all of the states have agreed to this. However, some states have disagreed over what to offer the banks. New York, Delaware, Nevada, Massachusetts argued the banks should not be protected from future civil liability. And the deal will not fully release banks from future criminal lawsuits by individual states. A few of those states and the attorney generals have already promised to pursue their own investigations. But what's interesting is California is not participating, I believe, in this program because they don't believe that this is good enough. And again, don't know the politics that are played when it was put together or are still going on.
It seems like that's all it is politics because it looks like we're doing something.
If I committed fraud, if James committed fraud, or anybody else out there committed fraud, not even on this level with the robo-signings, we would be prosecuted and put in jail.
Sure, you'd be writing letters to your loved ones from
That's correct.
Inside jail, yeah.
But the officials, whoever they are, these executives made these decisions at these lenders to send it off to these subcontractors to basically fraudulently sign legal documents that they were attesting to and swearing to, affidavits that they were personally knowledgeable on all of these. And if you didn't see the 60-minute report, I suggest you go to that website and find it because you'll be blown away. There's people out there that would sign 10 to 15,000 documents a day, and it wasn't even their signature that they were signing. They were signing some senior vice president at some bank saying that that's who they were. If we were to do anything that was just a sliver, an eighth, 1/100th of that, we'd be in jail. But somehow $25 billion is going to make most of that go away. Now, I'm encouraged to see that some of the states are stepping up and saying, well, we'll take this, but we're still going to go after some of these people that might be involved. So we have a caller who has a question about wanting to find out who owns their mortgage, and that's actually a very interesting point.
No, we don't have the caller. They just wanted to ask the question. Didn't want to go on the air, but that's okay.
They didn't want to go on the air. That's an interesting question. There's various ways to find that out. James?
Who do you write the check to? That's the number one.
What if it keeps switching? What if you started off your mortgage with one company and now you're with somebody else? And
legally, you have to be notified within 30 days prior to the switch. And then they can't, because that used to be a horror story. They would
so
just,
that's the current person you're writing the check to is the one you need to go to.
Actually, I think, James, what they're probably referring to, because we've run into this with a lot of people, what the misconception in the general public is that who they write the check to a lot of times is who owns their mortgage. And necessarily that's not always the case, because when they do a mortgage, just like a lot of times you're going to give an approval up front for them to go ahead and assign that mortgage out or sell it, even sometimes without prior knowledge. I mean, you obviously have to be notified when it's done, but you don't have to give permission for them to do it.
Correct.
And a lot of these banks, they already have it arranged to sell it on the secondary market to an investor, and then they just become the servicer. Bank of America, Chase, Citi. You may think that they're your mortgage company. But technically, they're not. They're your servicing company now, and there's a private individual or there's a group, and they're bought and sold on the secondary market. And so I think what this person is actually maybe wanting to know is who really is behind their mortgage, and that does take some investigation. The quickest route with it is to look up in the public record for your mortgage and find what they call the MERS number, and that's the mortgage electronic registration system.
MERS.
Right, and there should be a MERS number somewhere on the front page of the document. And if you go to someone in the business, we should be able to look that up for you, and it would tell you actually who owns the loan and who the servicer is.
Actually, if you go to the Fannie Mae website or the Freddie Mac website, just Google in Fannie Mae and Freddie Mac, and they'll give you their site. it'll actually say search for your home, and you put your address in there, and it'll tell you if it's a Fannie Mae property or Freddie Mac property. And that's actually the same site I go to when someone comes to me and says, I want to do a HARP loan. I have to make sure it's owned by Fannie Mae, and I put that address in there, and it'll tell you instantly who it is.
Yeah, I mean, if there's a good chance, the caller that left this message, and for other people out there, that your loan probably is owned by Fannie or Freddie, because, like I said before, half of the loans are. And if you go to those websites, we do the same thing in our office when we want to double check that as well. It's a matter of just filling in some basic information, and they will tell you if it's owned by Fannie or Freddie. If it's not, then at that point, that's when you have to start doing a little bit more detective work. And if you do need help with that, certainly if you contact us at Rescue Florida Realty, we can certainly try to help you with that. We have no problem just looking up a couple things for you. We'd be glad to help. It is an interesting question because a lot of people don't really know who owns their mortgage. A lot of mortgages were bundled and sold in securities. So
I have one wholesale lender that at the closing table, you're thinking you're going through this company, and they will make you sign a piece of paper there, and they actually wholesale off to Bank of America in the secondary market. You're literally signing a piece of paper saying, at the end of this transaction, within 30 days, I will be sold off to Bank of America. And they laughed. Actually, this individual turned around and said, well, wait a minute. I already declined by Bank of America when I went through the retail channel, but it's a whole different, that's a whole nother day, a whole nother ball of wax.
That's amazing.
Yeah, it is quite amazing. I just wanted to take just a brief second to mention something. I know we're all talking about some pretty deep things and things that are going on, but we have a really great event that I'm involved with over at the Pine School in Hope Sound this Saturday. And it's the 5th annual 100 Years of Cars show. And wow. It's really, it's a fun day. You're going to see all sorts of cars. We're actually going to have a 1912 Rolls-Royce and a 2012 Rolls-Royce. So you're actually going to see 100 years of cars right there.
Very impressive.
And all sorts of race cars, muscle cars, all sorts of stuff. It's a great day. There's food. There's things for the kids. The admission charge is about $10. All the money raised goes towards the Patriot Scholarship Fund, which is for children to apply for scholarships to go to the Pine School if their parents are either served or are serving in the military. And it's this Saturday, the 28th, 10 a.m. to 4 p.m. at the Hope Sound campus at Pine School. And you can visit their website, www.100yearsofcars.com. And 100 is the numeral 100yearsofcars.com for further information in regards to that. I think we've had a pretty good discussion here in regards to this interesting thing that may be discussed tonight during the President's address. It's probably going to be sold during this election year as another way of helping the public out of a bad situation. Yes, and obviously everyone pining for votes, but read into it, be knowledgeable about it. If it's something that you think can help you, you should really arm yourself with understanding of it and act on it. Do not wait, because you will be left out, and keep being persistent in regards to it.
All right.
I think anybody who might have questions about their own mortgages, in any way at all, if it's just to reduce the interest rate or, just find out where they're at, they should talk to one of you guys about that.
Yeah, I mean, we answer questions every day from people, and people are in various stages of despair or just stress, and you don't have to do it alone. Number one, you don't have to do it alone. Number two, there's plenty of programs out there that you can work through, but you can't wait. You just can't wait. You have to be proactive, because if you wait, you will run out of time.
Yeah, that's the big key.
Yeah, it really is, and unfortunately, we can only give advice. That's all we can do. We can't make you take action. We can only provide you the tools to help you take the action.
We'll be happy to give out your phone number to callers who call the station throughout the day, 340-1590 for individual phone numbers. You can call us here. We're about out of time.
Well, I appreciate it. Thank you.
Thank you.